So welcome to another video. In this video I'm going to be going over SMT divergences, okay, and how you can use them in your trading to see better results and get more profitable, okay? Because SMT divergences are one thing that I never actually used to use, but then when I did start using them I saw a lot better results and my win rate went through the roof, okay? And for how simple they are and how easy they are to spot and understand, I don't see why you wouldn't use them in your strategy. Okay, so if you're completely new and you don't know what an SMT is, I'm going to show you quickly. So, an SMT is where a high or a low gets swept on one but doesn't get on the other. So on NAS and ES, you want to see a high or a low get swept on one, but on the other one it doesn't. So on NAS, you might look something like this, okay? But on ES, it's going to look something like this, okay? So you see how one of the lows gets swept on ES, but on NAS it doesn't. So this is your actual SMT. It's as simple as that, okay? That is how easy it is. So that is an SMT, so that's what you want to be looking for. A high that gets swept or a low that gets swept but doesn't on the other. So now that we know that, and that's cleared up, I'm going to show you a trade example now of how I used one, to get a winning trade. So, as you can see here by this price action, here we've got an SMT. So, on ES you see this low actually got swept, okay, but on NAS over here that's the same low and it didn't get swept, okay. This price action did not sweep this low, so there is the SMT, okay. So you simply just mark this out. So there's your SMT on NAS, and then on ES you've got that, okay, and that's your bullish SMT. So now we've got a bullish SMT. We know it's a bullish SMT because the price hasn't swept this low, so it's showing that price wants to go higher. Because on ES it did, but NAS didn't. So that's saying that the markets aren't lining up and NAS needs to go higher. So then what I do is I mark out my target. So if we are going to enter a trade here, which we need more confluences first, but now we've got an SMT, we can start thinking about a trade idea. So now I'm looking for either inversion fair value gaps, or a displacement up and then a retracement. They're the main two things that I enter off. But for now we're just going to mark out some targets. So we've got a swing point there, we've got the top of the buy side liquidity there, and then here we've got the internal liquidity. Okay, so there's your three targets. So an entry model that I'm looking at now is this bearish fair value gap. Okay, so we've got this bearish fair value gap here. Now, my main strategy in trading is the inversion fair value gap model. So when this gets inversed, that's telling me that the buyers are now in control. You know, we've inversed a bearish fair value gap. So that's saying that we want to go higher. We've also got a bullish SMT. So for me, this is a perfect entry. I'm going to enter on the inversion, with my stop loss just below the fair value gap, and I'm going to target the top of buy side. Okay? And that's the trade. So that's a 5.3 risk to reward ratio. Okay, you can see we shot straight up, took the internal liquidity, and just kept going up. We took this pivot point, and then we ended up taking the full buy side liquidity. And now this trade idea all came from the fact we saw this bearish, bullish SMT. Now, if we didn't see this, then I don't think this trade would have likely happened. Okay, I wouldn't have been as confident in entering a trade here. But because I saw this SMT, you know, I was confident enough to enter this trade, and we actually got full TP on this one. So that was an example of a bullish SMT. Now I'm going to show you a trade example of a bearish SMT, okay, and a trade that I took. Okay, so here I'm going to show you an example now of a bearish SMT and a trade that I took using a bearish SMT and my inversion fair value gap model. So, looking at NASDAQ now, you've got this high, okay, that does get swept. But on ES, the exact same high doesn't get swept. So there simply is a bearish SMT, okay. So there you've got your SMT. Now we know we've got a bearish SMT. Now we look for our targets. So once I see this, you know, bear in mind none of this price action's happened. So all I can see is this so far. Okay, I don't know that we're actually going to come down. This is just an idea. But once I see these, once I see the SMTs, that's when I start looking at entries. So now I can see in the build-up, okay, we had this bullish fair value gap. Okay, so I'll mark that up. So we have this bullish fair value gap. Now, below, we've got these equals. So we've got equal lows down here. Okay. So we know that's a good target. It's a strong draw on liquidity. We've got these wicks as well, swing points. There's a lot of resting liquidity down here on the sell side of the market. So that's giving me more confidence, that we're going to go down. So now I just, we wait for the inversion. So price comes down. We actually disrespect this fair value gap that people have been longing from. So you can see, judging by these wicks, that people are actually buying in this fair value gap. So their stop losses are probably going to be below this internal liquidity. So again, there's your first target. So we're going to mark that up as our first target if we do enter a trade. So obviously we get the inversion. So now I'm entering a short position on the candle close below. My stop loss is going to be above the candle, and then my full TP is going to be the sell side liquidity resting in the market. And as you can see, we got a full TP hit. 2.7 risk to reward ratio, and again, this all stems from a bearish SMT or a bullish SMT. Now, for how easy they are to spot, in the market, and how often they happen, I mean, if you don't use these in your trading strategy, then you're just missing out on successful trades, because it's so simple to spot that when you see it in the market, because you've got these two charts playing next to each other at the exact same time on the 1 minute time frame. You can see if a high or low gets swept. You can notice the fair value gap as it's been made. So you would have noticed this a long time ago, before all these candles. And then the second you get disrespected, you can enter, and it's as simple as that. So that's it for this video. I've gone over SMT divergences. On my next video, I'm going to go over liquidity and liquidity targets, so you know where price is going to go, and where you can set your TPs and all that type of stuff. So if you don't mind liking this video, subscribe to my channel, and I'll see you on the next one.